Hey there, everyone, and welcome to the Final Bar. It's Monday, June 24th. I'm your host, Dave Keller. I'm the Chief Market Strategist here at Stockcharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the market action using the best practices of technical analysis. The voice is a little lower after spending the weekend singing second base with the Ohio State University Men's Glee Club Alumni Society. Shout out to my brothers in song that traveled to Columbus last weekend. We had a blast singing and laughing again together. Looking at the markets and, sort of checking in over the weekend and then taking a fresh look today, obviously a bit of a significant rotation, I would say, from the first half of last week to the last half of last week. Big change in complexion. We highlighted on the show mid last week those bearish candle patterns we saw in Nvidia, Broadcom, QUALCOM, those kind of names. I'm actually jotting down Broadcom in a moment. We'll see how I would argue the deterioration that we're seeing is sort of a continuation of the short-term distribution is now starting to be more and more days chained together. Remember, short-term trends can turn into long-term trends if they persist. I think that's the real danger for this market, as we've talked about so much, is the largest names start to struggle. With that in mind, let's get to our market recap and focus on how the charts played out through the course of the day today. The S&P 500 down about 0.33% to 5448, we'll call it. The NASDAQ composite finished slightly below 17,500. That's down 1.1% from Friday's close. The Dow was actually up 0.7%. A little later in the show, time permitting, we'll focus on the relative strength characteristics of some of those groups, and what you'll see is that certain areas of the market, are actually looking quite strong right now. Energy, arguably, looking the strongest, up the most today, I believe, and having a nice rotation to the upside. The VIX pushed slightly higher, and I think that's an emerging story you want to pay attention to. We still had a relatively low VIX now for quite some time, coming off the April low. A real risk to this market, again, is that volatility starts to spike higher. People start getting nervous when they see Nvidia dropping a number of percents every day. Volatility can increase. If the VIX spikes up, market history would tell you stocks are basically most likely going down in that scenario. Look at how interest rates rolled over going into the close. Bond prices actually rallied into the U.S. equity close. You can see the TLT was up about 0.4% today. Yields overall came down, and the 10-year point is right around 4.25%, 4.25%. The long bond yield a little bit higher, around 4.38%. The dollar index down about 0.33%. Again, another risk to this market is a rising dollar. We started to see that a bit last week. I think it's a real question mark for this week as well. And this week, you have some earnings for sure. It's going to be about economic data. And, the speculation is that will come in softer than expected, which should be a nice boost for stocks, but we shall see where the report comes out. Commodities overall mostly quite positive today. The DBC was up about 0.8%. That's a broad commodity ETF, kind of an energy overweight more than anything. The energy portion of the commodity space did quite well. Crude oil prices, natural gas prices were all up. As I mentioned, the energy sector did quite well today. Gold was up about 0.4% using the GLD. Others like silver and copper just up slightly from Friday's close. A lot of action in cryptocurrency. There's been a lot of discussion today about what is driving this rotation lower. Some stories that hit over the weekend into today, talking about how the German government had seized a stockpile of Bitcoin, for lack of a better term, and was starting to liquidate those assets, and that would put a lot of selling pressure. Could also just be the natural rotation maybe fueling into that as well. And as we've often said, buying begets more buying, selling begets more selling, and particularly when things start to rotate lower, people start to hit their stops, they start selling, that fuels additional declines. That's how waterfall declines certainly happen. And if you look at this is literally, if I would think of it, how to draw a waterfall decline, I'd probably draw Bitcoin over the last 24 hours. That's pretty good. We're back below 60,000 per Bitcoin all of a sudden. That's down about 6.5%. Ether and the top 10 coins all in the red today. Looking at the 11 S&P sectors, you can see energy up 2.5%. That's your top performing sectors. Utilities up 1.3%. Consumer staples up 1.1%. That is. On the downside, there's the real story, I would say. Tech down 2.5%. That hurts because technology is one of the biggest ways. It's consumer discretionary with names like Amazon and Tesla and others that are widely followed down as well. Those are your only two sectors that are down, but there's so much market cap in those big names. Most of those big mega cap names are in those two sectors. And then third from that would be the XLC communication services, which was up slightly. So the FANG sectors, I guess for lack of a better term, all in the red today, or mostly at the bottom of the leaderboard for sure. The S&P 500 market trend model, again, I update this every week after the Friday market close. No real change to my main market model, which is driven by the S&P 500. There was a bit of a pullback driven by the Nvidias of the world, but overall not enough to really trigger the selling or trigger a bearish condition there. Worth noting that the mid-cap and small-cap market trend models are both bearish on the short term. The small-cap model is actually bearish on the medium term as well, even though there was some days last week where small caps did just fine. There's enough of a deterioration there to trigger a bearish sign from the small cap model. Looking at the Magnificent Seven and Friends, you can see only a couple of these up today. Meta was up 0.8%, Apple up just below 1/3%. The real story again at the bottom, Nvidia down almost 7%. That hurts. That is your biggest stock in the S&P, biggest stock in the U.S., and biggest weight in most indexes, and it's down that much. Netflix down 2.5% as well. Amazon down 1.9%, which is why the XLY is in such a dangerous area. Let's go to a daily chart of the S&P 500, see how things played out on the chart here. And again, one day doesn't usually make a whole lot of difference. But, again, last week we talked about on Thursday's session that bearish engulfing pattern that we saw with the S&P 500. I'm going to go briefly to the candle chart, just kind of zoom in on this a little bit, and then we'll go back to the regular daily bar chart. But there's that bearish engulfing pattern. We highlighted that last week on Thursday's show with a number of stocks that had that distribution, Nvidia and others that I mentioned, and the S&P as well, all having that classic distribution pattern. That usually tells you the next 1 to 3 bars are going to be lower. That's certainly what we're seeing. I think you'd probably label today's candle a shooting star candle, which is what happens if you'd still consider this an uptrend, which I would. A big candle like this where the open and close into the lows of the day, long upper shadow, that's called a shooting star coming down from the sky, usually is a bearish, maybe a bearish signal of further deterioration to be had here. Now, this is what's happened the last week. You had that big move higher. That was last Tuesday, I think. And then we basically had, sorry, is that right? I think it was last, it was maybe last Thursday? No, yeah, Tuesday. You had that big up day, and then you had the Juneteenth holiday last week, and that's messing with my head a little bit with the timing of things. But from there, after that big move higher, it's sort of been sideways, right? I really haven't made any additional gains. Any attempts to go higher have been repelled, and you've seen sellers come in and sell off on that short-term strength. Now, we haven't broken down through anything, so let's be clear. I don't think this is a market in anything but an uptrend just yet. And again, that's not a judgment call. That is a factual assessment of the trend characteristics, right? Looking at the highs and the lows and the general pattern here. This is a market's still going up, but if and when we break below this gap, which would be the most recent area of support that I think is very clear, maybe we break through this trend line support as well. That would be the initial warning sign that things are really starting to deteriorate. One other thing, change here from end of last week to the beginning of this week is that the S&P 500 was overbought until today's session. Friday close, we were still at an RSI above 70. Today, we actually moved below 70, and that is, again, a classic pattern. We've had a market going higher. We're overbought. All of a sudden, we break below there, and that can be the sign of a top. Now, there can be just short-term blips before the uptrend resumes, which is why this isn't my favorite sell signal I've ever had, but it is worth noting that usually the market isn't driving higher on the tactical time frame if the RSI is overbought and then comes down. It usually means we're in a bit of a pullback or a bit of a downside move, before the next leg happens. Just to look at the QQQ, I wanted to highlight the fact that with this deterioration, it's really making the Qs come down as well. We can see this, last 3 days all closing below the open. I think what's worth noticing here, and I'm just going to go to the last year, zoom in a little bit. I'm looking at a lot of the Qs. The other thing you can do with a market like this that is going higher and just trying to figure out when it's going to stop going higher is just draw some trend lines, right? Draw trend lines off of the major lows. So I'm kind of just loosely drawing this trend line from the mid-April low, the early May low, kind of lining that up with the late May low. And that, again, if nothing else, right, we have this much space before we would really create a dangerous scenario, which would be we break below trendline support. So we were overbought. We're no longer overbought. That's not necessarily bullish at the moment, but we haven't broken down yet. And so we're in that limbo where it's not, screaming bullish as it was until today, but it's not horrible yet because we've just maybe begun a bit of a pullback phase. So certainly worth monitoring and paying attention to. Breadth conditions remain actually at this point, I would say mixed. The McClellan oscillator is still negative. That's based, it's really a short-term breadth indicator, taking the advanced decline data and turning it into an oscillator. So remaining below zero just basically means you haven't had that broad advance off of the most recent swing lows. And this market has been dominated by the biggest names leading things higher, which is why the McClellan oscillator has been below zero while the market has kept going higher, because the benchmarks are driven by those biggest names. Worth monitoring, and again, I think a healthy change in this chart would be the McClellan oscillator going below zero, which would mean just more and more stocks are going up. And that should be good if you're a stock picker, because that means there are things out there that are actually starting to improve. With that in mind, if you look at the percent of stocks above their 50 and 200-day moving averages, it's worth noting that over the last week or so, this has actually been improving because so many stocks were not participating in the uptrend. Now we're starting to see this reverse, right? We're seeing the benchmarks come down because the biggest names are struggling. A lot of other names are starting to improve, and as a result, more and more stocks in the S&P 500 are actually getting back above their 50-day moving average. A little counterintuitive, but that is the nature of what happens when the market is driven by the biggest names, and all of this kind of plays out with that general playbook. Volatility has come up slightly, but is still very slightly. We were down to a VIX around 12 earlier in the month of June. We're now up at around 1350, which is still, again, very low. Any reading here below 15, I think, is a low volatility, very safe environment, telling you long and strong conditions are good, no real uncertainty being elevated, no fear that it's palpable. VIX above 15 is where I have an alert set. I would encourage you to do something very similar. For now, it's telling you the conditions are sort of okay. Looking at some other charts here to finish off the final bar for this Monday afternoon as we get to near the end of Q2. That's another thing that's in the back of my head. When you get toward the end of Q2, that's where you get some quarter-end window dressing. A lot of money managers will want to clean up their portfolio, make sure that any sort of out of benchmark bets that have crept into the portfolio sort of get cleaned out. So usually you have things sort of neatened up at the end of the quarter before a re-risking that happens after. Given the narrow leadership, I'm very curious what the market will do in anticipation of that quarter end here. You basically have this week. And then the beginning of next week, all of a sudden we're in the 4th of July holiday. We're in the month of July. So this is it for Q1 here. Worth noting, Bitcoin really accelerating to the downside. And again, a lot of speculation. With something like this, it's never totally clear as to what is happening or why it's happening or what's driving it. There can just be speculation. And having conversations with people who may know and trying to piece together a story. At the end of the day, I think this is a great reminder that markets move on supply and demand. They move on fear and greed. And for whatever reason, people getting greedy, getting fearful, that's how it's reflected in the stock price. That's why I think charting and technical analysis is so meaningful, because you don't have to worry about the why. You worry about what's happening and when and how, and looking at price action as a way of confirming shifting perceptions and shifting investor psychology. So what is happening right now is look at the chart of Bitcoin in the month of June, and you can see that first week in June, things were looking really good. We're at the upper end of this range. It's really been in place for the last 3 or 4 months. We were up above 70,000 again. We hit 72,000, which is where we peaked out in May. We failed to get above there and then rotated lower. Now we're rotating back to the lower end of that range. As of today, we're actually trading below that low. So 60,000 sort of been my my floor in this market. Looking at the chart for the last couple months, that seems like a place where we've had some consistent lows. We're kind of right there. So this is the moment, right, where Bitcoin either finds stability and bounces higher, or it's the beginning of something much, much worse. Now, a number of things are at work here. We're at big round number support of 60,000, so you'd expect a bit of a bounce. You could arguably, say that the low at the end of April, beginning of May was all playing around that 60,000 level. First Fibonacci support, taking that big move higher the first quarter of this year, gives a first Fibonacci support level around 60,300. Again, as of today, we're trading below that. We'll see how things play out over the next day or two, but we're sort of right at that point. The 200-day moving average is just slightly below current level. So is this that time, where Bitcoin actually goes back below its 200-day moving average? A lot of other things to think about. Bitcoin is now oversold for the first time since August of last year. And if you look there, we actually spent quite a bit of time in a bottoming process before we finally broke out in mid-October. So we are at a confluence of support. I think we're right at that level where, if you're looking for a bounce, kind of has to happen now, because if not, if we get much lower, and really if we get below 57,000, that would mean price support has not held, Fibonacci support has not held, the 200-day moving average has not held. There's not much going on below until you get down to 52,000, which would be the next Fibonacci level, the swing low from February, big round number at 50K. That's another, 8,000 points, actually below current levels, around 59,000 points, almost another 18% below current levels, 19%, something like that. So really crucial moment for Bitcoin, worth following there. I do want to show you in my Mindful Investor Live chart list toward the end. I have a group of charts looking at relative strength. This is really thinking of the different buckets of sectors by the type of companies, right? Growth companies, defensive plays, and then this is I've grouped together what I call value sectors. And again, there's no perfect way to group these, to be honest with you. I think anything has its flaws and has its benefits. This is how I like to simplify it. And these four sectors for me are value plays. They tend to be higher dividend. They tend to, really be, the types of names that are going to work when rates are going higher or elevated. These are the types of sectors that tend to do better in that environment. Industrials, financials, materials, and energy. And you can see that the relative strength, these are relative strength ratios. So it's each sector versus the S&P 500. You can see all four of these just in the last week or two are just starting to turn higher. So it's not enough for me to say these are obviously where we all need to be, but it's definitely a change of character, I think, from what we've seen from mid-late April, where all four of these were just consistently underperforming. That's starting to look a little different to me over the last week. So again, going into the 4th of July holiday, I think that's going to be pretty important, because if these are going higher, that means most likely some of these other sectors, the growthy sectors like technology, which have been, by far the best performing of all, are starting to struggle a little bit. And over the last week, semiconductors, technology, all rotating to the downside. Let's look, that's not the chart. Let's look at Nvidia. We'll get some of the other names here. So, we highlighted this candle pattern. This is a bearish engulfing pattern that we observed on Thursday's action, or Thursday's session, where you had the big update that was on Tuesday, then the big engulfing pattern on Thursday. There's Friday and there's today. So no buyers coming in. I mean, essentially there's continued distribution. And so that candle pattern really stood out to me, and so far it's played out kind of what you'd expect, right? And this is sort of the ideal reaction to that sort of pattern. So this is why I think even if you're more of a longer term investor, recognizing some of those tactical patterns, candle patterns, other short term indications, just can help you, give you some context about what sort of short term environment to expect. And then think about what that means, right? If you're really bulled up on Nvidia, that pattern tells you today's not the day to be taking additional positions. Let's wait for a pullback and see what happens. The 50-day moving average, by the way, is all the way down here, 101.50. That's actually lining up really well with this price gap from the last week in May. Maybe that's a downside objective to think about for sure. Qualcomm is another one with, this was actually an evening star candle pattern. We have an up day, the gap higher, the gap lower, and the big down day. Also a downside reversal pattern that is played out sort of as expected. And again, Broadcom, all of these showing quite a bit of distribution here. Broadcom's an interesting one because it had gapped higher from 1,500 to around 1,650, we'll call it. Got all the way up to around 1,850, but then over the last couple days, 3 big down days in a row have taken us all the way down to the middle of that gap around 1,600. I'm looking at the lower end of the gap around 1,500. See if that gap is filled. I would keep an eye on there to see if there's potential area of support. So what's working if these big technology giants are not? I'll tell you one thing that is starting to work a little bit is energy. We talked about crude oil getting back above $80 a barrel. It has happened. We talked about on a chart like this, taking a trend line from the recent lows, and again, depends on how you want to draw this. You want to draw it here and line it up with some of these levels we've already broken above there. You want to draw it here, which would maybe be that high, and then that next time. That was that's pretty good. This one and this one, we actually just are closing above there today. So depending on how exactly you draw that line, we're getting above it. The question is this enough to sort of indicate a change of character with the XLE, the RSI still sort of in the bearish general range, but I like that bounce off of the 200-day. I like this break above trendline support. See if we can follow through above the 50-day. That could be really interesting. Some of the larger names in here like Schlumberger, right? Giving a bit of a short-term double bottoming pattern, starting to bounce higher, back above the 50-day for the first time since mid-April. The RSI pushing above 60. I actually think that's quite encouraging. And other names in here worth looking at as well. FANG, a clear breakout above trendline resistance. So it's interesting, we may be seeing here over the last week the beginnings of that rotation we've talked about, right? We've talked about how this market has been moving higher, dominated by some of those growthy mega cap names. A lot of them are struggling with Nvidia, with Amazon. I didn't really show that chart. Amazon, again, with today with a bearish engulfing pattern. Let's look at that one to finish off the show here. This is Friday's candle, briefly breaking above the high from earlier this month in June. Today, higher open, lower close. So this is actually looking similar to Nvidia and Broadcom and others with those bearish candle patterns at the top. We're getting one today on Amazon as it's rotating lower, almost 2% to the downside. On the other side, you have value sectors starting to pop a little bit. And the stocks that I'm seeing making the biggest gains today are in sectors like energy, which are sort of forgotten, underweight, underappreciated sectors. This week, I think the real story is going to be validating this potential rotation. Is that the end of Nvidia? I don't think so, but maybe it's the end of the short-term dominance here. Maybe this is an end-of-quarter story that will play out through the course of this week. Make sure you tune into the Final Bar all week here, and we'll continue to keep you updated on how these charts are evolving as we track this potential rotation. For Stock Charts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night.